Hey guys, my name is Roshan Barwani, and in today's video, I'll be discussing the market news and updates all related to cryptocurrency. Just on a side note, this video does not contain any financial advice. Now, without waiting further, let's start the video. For years, the crypto community has been anticipating institutions adopting and implementing blockchain technology because of its potential. In 2020, we saw the door open and money started flowing into BTC. The astronomical increase in prices of digital asset is caused by institutional capital flow and interest garnering towards cryptocurrency. A simple definition of institutional investment is when a firm invests money on behalf of ordinary people or high net worth individuals. Mutual funds, hedge funds, pension funds, and endowments are some of the examples of institutional investors. Institutional investors control the majority of investable assets. Some estimate that they're responsible for about 70% of stock exchange volumes. Many institutions try to keep away from crypto for later reasons and the regulatory uncertainty. Until the pandemic was kicked off in March 2020, crypto was seen as magic internet money beans. Suddenly though, things changed. The pandemic hit hard, and the Federal Reserve turned on their printers and started opening investigation and questioning digital assets. When the Federal Reserve started printing money like never before, investors began worried about inflation and needed a way to hedge. Investors could take the traditional route of investing in gold, or look at this alternative investment with a fixed supply and is fully governed by code with no transport, storage, or liquidity issues. Bitcoin. Investors' interests peak and pressurize big institutional firms and money managers to fulfill their wishes. Otherwise, investors would take their capital elsewhere and hand it over to someone that would. That's exactly what happened with JP Morgan. JP Morgan is the biggest bank in the United States. They control over $3.3 trillion worth of assets. On the 22nd of July 2021, the bank announced that they have given the green light to start offering cryptocurrency funds to their wealthy clientele from the wealth management wing. These clients hold no less than $10 million each. The move was to push through customer demand, showing that the institutional interest truly is alive and well. This bank has often been perceived as a crypto hater due to its CEO's public stance.
I could care less about Bitcoin. I don't know why I said anything about it. What I have an issue with is a non-fiat cryptocurrency. Dollar, so crypto, sterling, euro, yen, they're all fine. I don't personally understand the value of something that has no actual value. You all can do whatever you want, and I don't care. Okay?
All right, that sounds definitive. Bitcoin hit a new high today.
I could care less what Bitcoin trades for, how it trades, why it trades, who trades it. If you're stupid enough to buy it, you'll pay the price for it one day. So there is a use case for Bitcoin if you live in Venezuela, North Korea. If you're a criminal. Great product.
How many times do we have to teach you this lesson, old man?
I love the young people.
I asked you about Bitcoin, if you remember. We were on a stage together, and back then you said, I believe, that you were not a believer in Bitcoin. I think you're worried that the government might not allow Bitcoin, but it appears you've changed your mind. They want to know why. Walk us through what happened.
The bank itself is not anti-crypto, as many believe. In fact, in recent weeks, they even announced that Ethereum might kickstart a $40 billion staking industry. Now, let's look at some more concrete numbers. In July 2021, a survey was conducted by Fidelity Digital Assets. 71% of institutional investors plan to buy or invest in digital assets. 90% of interest institutions expect to invest within the next 5 years. 80% of institutional investors believe digital asset must be a part of a portfolio. This data indicates that institutional journey is still very early, and there are much more to come.